Welcome back, everybody, to the deep dive. This time, we're going deep into the world of coal, specifically with Alpha Metallurgical Resources. They're one of the biggest suppliers of metallurgical coal in the U.S., a type of coal used to make steel. And we're going to be looking at their Form 10Q, the quarterly report they filed with the SEC for the period ending September 30, 2024. Basically, we're going to be financial detectives for a little bit, trying to figure out where Alpha stands today and maybe get some clues about where they're headed.
Yeah, this 10Q, it's really like a snapshot giving us a peek into the company's financial health.
So, your mission, if you choose to accept it, is to leave this deep dive with a really clear understanding of Alpha's financial position right now. Are they standing on solid ground, or are there some cracks starting to show? And to help us make sense of all the financial jargon, we've got a real financial whiz with us.
Oh, I don't know about Wiz, but I can definitely help break down these numbers.
Perfect. Okay, let's dive right in. One of the first things that jumped out at me was Alpha's net income for the quarter, $3.8 million. Now that might sound all right, but compared to the $93.8 million they brought in during the same quarter last year, it's a pretty big drop. Does this mean things are starting to go south for Alpha?
Well, it's not always that straightforward. While their income for this quarter is down, we got to look at the bigger picture, right? Their total income for the first 9 months of 2024 is still pretty strong, $189.7 million. So just focusing on one quarter can be a little misleading, especially in a market as unpredictable as coal.
Right, so for investors, it's like, don't just freak out over one quarter's results, understand the long-term trend.
Yeah, exactly. Each quarter is just one little piece of the whole story.
Speaking of the whole story, there's this section in the report called cautionary note regarding forward-looking statements. And basically they're saying anything could happen. You know, coal prices could go haywire, steel demand could fluctuate, even transportation costs could spike. It's like a big disclaimer for how unpredictable their business really is.
Yeah, that's a common thing you'll see in these types of reports. It's really just highlighting all the stuff that's outside of Alpha's control, things that could impact their performance. Take the global steel market, for example. It's in a bit of a slump right now. China's economy is slowing down. There's geopolitical uncertainty all over the place, and it's all having a ripple effect on the steel industry. And of course, that directly impacts the demand for metallurgical coal, which is, Alpha's main product.
So it's all connected, right? Like one thing affects another and then another, almost like a domino effect.
Exactly. And that makes predicting the future, well, pretty difficult. But even with all the doom and gloom, there are some bright spots. While a lot of economies are slowing down, the World Steel Association is actually predicting that India will be an exception. They're expecting strong demand for steel in India, which could be good news for companies like Alpha.
So maybe Alpha could tap into India's growth and make up for some of the losses they're seeing elsewhere.
That's certainly a possibility, worth considering for sure.
Especially considering Alpha is already making moves to adjust to the current market, right? They're planning to idle their Checkmate Powellton mine because of those low coal prices. Isn't that a bit of a gamble? Could impact their production, right?
It might seem risky, but I think it's actually a smart move. By idling the mine, they can cut costs and avoid even more losses in a market that's not doing so well. Shows that they're willing to adapt and make tough choices to stay afloat in the long run.
Yeah, so they're not just crossing their fingers and hoping for the best.
Nope, definitely not.
All right, so let's get into the details of Alpha's revenue. The report breaks down their revenue by segment, and it's pretty clear that met coal sales are their bread and butter.
Yeah, that's their core business, no doubt. But, like we were just talking about, the global steel slowdown has hit them there too. Both revenue and sales realization, the price they're getting per ton of coal, have dropped this quarter.
Yeah, the numbers definitely tell the story. The revenue is down to $669.8 million for the quarter, and the price per ton of coal is lower than it was last year. Seems like even their core business is feeling the squeeze.
It is, yeah. And if we dig a little deeper into their cost analysis, a few more things stand out. Freight costs have gone up, probably partly because of inflation, and that's eating into their profits. Plus, there's the startup costs for that new mine they opened. That's adding to the pressure, too.
Woof. Sounds like a lot to deal with, huh? Lower prices, rising costs, and then you throw in a volatile global market.
It's definitely not an easy time for them. But, amidst all these challenges, there's one thing in the report that really caught my eye. As of September 30th, 2024, their long-term debt is only $3.6 million. That's incredibly low for a company of their size.
Wow, that's really low. What does that tell us about how they manage their finances?
I'd say it shows they're pretty conservative when it comes to debt. They've clearly made it a priority to keep their debt low, which could be a real advantage in these uncertain economic times.
So you're saying low debt might actually be a good thing right now, gives them more flexibility.
Exactly. It's like having a safety net if things get even tougher. And speaking of safety nets, they also have $155 million available through their ABL agreement that they haven't even touched.
ABL agreement, what's that? Sorry, not all of us are financial experts.
Oh, right. ABL stands for Asset-Based Lending Agreement. It's basically a type of loan where the borrower's assets are used as collateral. So in Alpha's case, this agreement gives them access to a line of credit up to $155 million that they can use if they need to.
So like a backup source of money they can tap into if things get really bad.
Exactly. Gives them a bit of a cushion, which is always a good thing in a market like this.
So if we think about our mission for this deep dive, it seems like Alpha's sending us mixed signals, right? On one hand, they have super low debt and access to extra funding, which suggests they're in a pretty strong position. But then there's that recent drop in earnings and all the external pressures they're facing. It's almost like they're walking a tightrope.
Yeah, it's a tough balancing act for sure. They have the financial tools to weather the storm, but whether they thrive or not, well, that depends on how well they navigate all these challenges and seize opportunities, like that growing demand in India we talked about.
And that seems like a perfect segue into the next part of our deep dive.
Yeah, it really is a tough balancing act for them. And, something that might give them an edge is their focus on responsible mining. When I was looking through their 10Q, I was pretty impressed with how much they talked about worker safety and environmental stuff. They don't just list the regulations, they go into a lot of detail.
Oh, you mean like those sections about safety protocols and training and incident reporting? I kind of skimmed over those. I was too focused on all the financial numbers, huh? But you're right, it does tell you something about a company when they actually prioritize their employees.
Exactly. It shows they care. And they're not just all talk. They've actually invested in all these safety protocols, and they're actively trying to reduce risks in their mining operations. They even get specific about their safety training programs and how they report incidents, which shows they're being transparent about how they manage safety.
Okay, so they're taking care of their people, but what about their environmental impact? Coal mining doesn't exactly have the best reputation.
Yeah, I know what you mean. But they're very aware of that reputation, and they're really trying to change it. The report highlights all the work they're doing to minimize their environmental footprint. They've put a lot of money into things like land reclamation and water resource management.
So it's not just a case of digging up the coal and leaving a big mess behind.
Not at all. They talk about how they're committed to restoring the land after they're done mining and controlling air emissions and managing water responsibly. They clearly get how important it is to be environmentally responsible, especially in an industry that's facing more and more scrutiny these days.
So is this focus on sustainability just good PR for them, or could it actually affect their bottom line?
Well, it's definitely becoming more than just good PR. Investors these days are really starting to pay attention to ESG factors, environmental, social, and governance. Companies that have a good ESG track record tend to attract more investors, especially the ones who are looking for long-term, sustainable investments.
So Alpha's commitment to responsible mining could actually make them more attractive to certain investors.
Exactly. It's a smart business move that aligns with what investors want and keeps them ahead of the game.
Speaking of changing the game, let's talk about the big elephant in the room. The global energy landscape is shifting towards renewables. What does that mean for a coal company like Alpha? Are they doomed?
That's the question, isn't it? The report does acknowledge the whole energy transition thing, but they also emphasize that there's still a strong demand for metallurgical coal. You need that coal to make steel. They believe that even in a world where everything is decarbonized, met coal will still be a vital part of steel production for a long time to come.
So they're not just ignoring the fact that the world is changing around them.
No, definitely not. They're being realistic. They acknowledge the energy transition is happening, but they also point out that met coal isn't going away anytime soon. And they're not just sitting still either. They're investing in research and development, exploring new technologies, and trying to diversify their products to meet future demand.
Sounds like they're in it for the long haul.
Yeah, exactly. They're focused on sustainable growth and creating long-term value, which is a good sign for anyone who invests in them.
Okay, so let's recap what we've learned about Alpha so far. They're definitely facing some challenges, like those low coal prices and the slowdown in the steel market. But they're not just letting it happen to them. They're taking action, like idling that mine and putting money into research and development.
And their financials are actually pretty solid. That super low debt level and their access to that unused credit line give them a lot of flexibility, more than a lot of their competitors probably. Plus, their focus on worker safety and the environment puts them in a good position for the future when those ESG factors become even more important.
It's kind of a mixed bag, isn't it? But I definitely get the sense that Alpha is actively trying to navigate all these challenges and seize any opportunities that come up. They're not just reacting, they're thinking strategically about the future.
And that brings us to the most important question. How does all this information benefit you, the listener? Why should you care about what's going on with this coal company?
Yeah, good point. We've been so deep into Alpha's financials, it's easy to forget why we started this whole deep dive in the first place.
This isn't just about one company. It's about understanding a whole industry that plays a big role in the world. By looking at Alpha's story, we can learn about the global energy market, the challenges and opportunities of this whole energy transition, and how global trends impact businesses. It reminds us that even with the focus on renewables, traditional energy sources are still important. And understanding the financial health of these companies helps us make better decisions, whether we're investors or just informed citizens.
Yeah, it really is like peeling back the layers of an onion, isn't it? We started with these, kind of boring looking financial statements, but we've uncovered this whole story about adaptation, resilience, and all the crazy things happening in the energy world right now.
And like any good story, there's always more to uncover, right?
Yeah.
Remember those things we talked about earlier, like how Alpha has such low debt and that growing steel demand in India? Those are just two pieces of a much bigger puzzle.
Yeah, you're right. It's almost like we've set the stage but left the ending open.
Exactly. And that's where you, the listener, come in. You've got all these insights from our deep dive, so now you can connect the dots and come to your own conclusions.
So as we wrap up this exploration of Alpha Metallurgical Resources, we want to leave you with one final thought. Given their financial strengths and all the ups and downs in the global coal and steel markets, how could Alpha use those advantages to deal with future challenges? Could they use those opportunities, like the growing demand for steel in India, to really cement their place in this changing world?
Those are some really good questions to think about as you continue to explore the worlds of finance and energy. Keep learning, keep questioning, and most importantly, keep diving deep.
That's it for this deep dive into Alpha Metallurgical Resources. We hope you've learned something new about the coal industry and all the financial stuff going on behind the scenes. Until next time, stay curious, everyone.